Folks, the second reason cited by CORE for financial stress is non-availability of assessed working capital. On Q1 of financial year 2013-14, management had estimated this non-availability of working capital at Rs 85 crore. We will evaluate if management of CORE education is reasonable, in highlighting non-availability of assessed working capital, as one of the reason of significant financial stress on the company. We have divided our study of working capital of CORE in two parts. Firstly, study of working capital on standalone basis, and then on consolidated basis. We have calculated working capital for the company, by deducting current liabilities from current assets. Also we have calculated, assessed working capital requirement. For this purpose, we have taken current assets less advances given, and reduced the current liabilities from there. Also, we gave calculated working capital as ratio of sales. Few key observations that you can make are: 1. Very low level of working capital maintained, in the parent company. 2. Working capital to sales ratio is falling, because of capital investments in subsidiaries in form of equity. During the financial year 2012-13, the equity investment made in subsidiaries is Rs 177 crore. This resulted to cash getting blocked in long-term investments. In later part of our research, we will see how this situation became critical due to non-performance of subsidiaries. 3. Assessed working capital is so low, because of very high level of advances by parent to related and unrelated parties. In fact, short-term loans and advances has jumped up by staggering 160% during the year. Friends, as we have done for parent, in the same way we have calculated for the group as a whole. 1. Working capital. 2. Assessed working capital. 3. Working capital to sales ratio. We have observed that 1. Working capital is maintained mostly in subsidiaries. 2. Working capital is growing steadily in last 3 years, though not in proportion to revenue. 3. Major contributor to working capital to sales ratio decline for the group is Rs 247 crore, long-term unsecured advance paid out of cash generated from operations, purpose not disclosed. 4. Negative assessed working capital is majorly due to Rs 246.11 crore, short-term advances paid to related and unrelated parties, during the year, nature of most of them not disclosed. Thus folks, we can say that negative level of assessed working capital is creating stress over the company due to 1. High level of non-performing long-term advances, and equity investment in subsidiaries. 2. Piling of short-term advances to related and unrelated parties.